Well, elections across the world are putting emerging markets in focus for investors, as new leadership could mean new opportunities. Argentina's presidential election currently in a runoff with left-wing candidate Sergio Massa leading. Now, this comes a week after Ecuador and Poland vote in new pro-business leaders. And on deck for the coming months are Egypt, India and Mexico. According to Bloomberg, those 6 elections can affect more than $200 billion of sovereign bonds. Well, joining us now with his insight into these emerging market moves is Simon Quijano-Evans, Gemcorp Capital Chief Economist. Thank you for joining us this morning here. So first, I want to sort of set the scene here, because we talk a lot about rating agencies and how they assess emerging markets, but then you also have your reality index as well. So give us a lay of the land here, especially with these elections in mind, as to what sort of opportunities you see.
Well, it's very interesting. The elections do form part of this more qualitative backdrop that you're looking at. And if you look at some countries, especially sub-Saharan African countries, then they do look underrated. And you were just talking about Greece just now. And I remember 10 years ago when Greece was pushing through a whole load of things before elections, after elections. Well, the same thing is happening in emerging markets. And I think looking at, in general, what we're starting to see, as you mentioned, is some positive green shoots. For example, the elections results in Poland, where we see a more reformist government, less nationalistic government coming in. In Ecuador, hopefully a calming down of the situation there. Looking ahead, it's going to be tough. And I think that emerging markets are really very much going to be driven what's happening in the Middle East. But let's face it, year to date, spreads in emerging markets on the EM US dollar bonds have been very flat at about 450 basis points. And it doesn't look as though that picture is really going to change very much.
So then, based on what you're seeing then, which are some of the most undervalued emerging markets?
So if we take countries like Kenya, for example, even Ghana, which is going through a restructuring phase, you have countries, for example, like Indonesia in Eastern Asia. You have countries perhaps like even Ecuador, potentially also Argentina. And what the qualitative data are telling us, this reality index, as I call it, which takes into account education levels, female to male labor force participation rates, internet access, for example, to empower the populations for future democracy. All of these things show that a number of emerging market countries are underrated. And I think ratings agencies, as we move ahead, need to look more into these qualitative aspects, not just the quantitative type of data that we're seeing as they've always used.
And so then, as we look at some of the returns that we've seen in different aspects of these emerging markets, then what are the real standouts here?
I think, well, on the downside, if you like, obviously countries like Turkey, which have had problems on the political side getting involved in monetary policy. Looking ahead, there's been a real change to the economic team there, the macro team led by Finance Minister Şimşek and the new central bank governor. So looking ahead, there's potential for Turkey, for example, to catch up both on the dollar bond side and the local currency side. If we look at the currencies in emerging markets, you see countries like Brazil, Mexico, even Colombia outperforming other emerging markets, and indeed many developed, so-called developed market currencies out there. Why? Simply because their central banks have been much more proactive. They've had positive real interest rates, which we've only started to see, for example, from the Fed in the last 3 to 6 months, and still not fully seeing from the ECB and Bank of England. So I think those countries that really have outperformed are the countries which have been much more proactive on the central bank side and much more cautious on the dollar bond side.
And I do want to ask you about some of the shifting dynamics, obviously, because of geopolitics, and especially Saudi Arabia. What is the focus there, especially when you think of their dynamics with China and some of these other superpowers, and what some of the moves that we've also seen with the dollar, given what we've seen with inflation?
Well, GCC countries are very much driven by oil and natural gas sales, whichever country you're looking at. Saudi Arabia is really on a reform path towards that so-called 2030 agenda. All kinds of renewable energy projects, the projects for real estate, the projects for water, for education, for increasing the awareness of society to the outside world. And I think that this is moving in the right direction. So as we see the situation I would say becoming more risky, obviously, in the Middle East, a number of countries are going to have to look how to position themselves. And clearly, Saudi Arabia has been trying in this attempt to improve relations with many countries in the region, including Israel. And I think this is something that we're all focusing at the moment for the next 3 to 6 months.
And just very quickly, a word of advice for anyone who's new to investing in emerging markets. What should they put on their checklist?
Well, that's a very interesting question. And let's face it, if you look at the classic bond indices out there, the dollar bond indexes, then you have 70 plus countries which are constituents, which are members of these indices. It's a wide spectrum of country. There's a lot of diversification within those indices. I think for somebody who's looking to enter the markets in emerging markets, maybe the dollar bond indices, ETFs are the first step, given that you have a lot of diversification and you have a lot of stories that you can't possibly look at an individual level. If, as an investor who's entering emerging markets for the first time in the local currency bond space and indeed in the equity space, you're going to have to take into account foreign exchange risk and to maybe hedge yourself there. But there are a lot of more risks which need a lot of more time to analyze, basically.
I appreciate you breaking that down for us. Simon Quijano-Evans, Gemcorp Capital Chief Economist, thank you for your time this morning.
Thank you.